Hello everybody, my name is Mark. Welcome to another one of my investing videos. And in this video I am going to talk about the ratio put spread. I have a little bit of money that I put in Schwab. I opened an account with Schwab. I put in about $3,000 and I'm doing a put spread on Intel. And let me go ahead and go to my transactions and show you what I did. So okay, so here's my transactions right here. So back on March the 8th, today is May the 19th. So back on March the 18th, I bought to open this $52.50 put. It expired in January of 2021 to Leap. And I spent, over here you can see I spent $738.60. And then I immediately began to sell the open short puts, and so I started by selling a 51.50 and I brought in $38.40, and it was a weekly, and then I bought it back for $2, and then I sold a 53, brought in $25.40, and then bought it back for $3. So you see it started out as a diagonal spread, and then I sold to open a 53.50 for $21.40. And Intel had a bad earnings, and this was the first time that I had to roll down, and so I bought it back for $122.60, and then I sold to open a $53, and I took in $128, so that would have been an extra $6 of a credit, and that would have been for April the 12th, so this was a March 29th, so that was like 2 weeks to get that credit here, and then I bought it back for $4, and then I sold to open another 53, and I took in $58.40. And then Intel started dropping again, and this was the last recent sell-off. I think it had to do with the tariffs when the whole market was tanking. So I bought it back for $107.60, and I sold to open a 51, $2 lower of a strike price. Took in a $4 debit. And then Intel dropped again, and so it's kind of the same old story that I ran into with Microsoft. If you watch my last video from a few days ago, I lost money doing a spread on Microsoft because of a problem with the Delta, and I was running into the same problem. And so I bought it back for $138.60, and then I sold to open a 49 for $149, and that was $2 lower. I took in about $11 credit, and Intel just kept dropping, and so Intel dropped down to about $46 a share, and I said, forget this, I am buying to open another put. And just like magic, my put spread turned into a ratio put spread, and so I'm going to talk about how this ratio put spread works. So this ratio spread has solved my problem that I had with the Delta. Okay, now let's go to my main position here. Let's go to the home page, and let me show you my current positions. Actually, let me go back to my transactions and real quickly take a look at how much money I spent for that put. So I spent $585.60 for the $45 put, and I spent $738.60 for the $52.50 put. And both of those expire in January 2021. So remember those numbers. Now let's go to my home page and let's take a current look-see at what's going on here. So here's my positions right here. Okay, these are my 3 puts here. And right here is the $45 put that I spent $575, and it's up. It's up $50 to $622.50. And the reason why it's up is because Intel keeps dropping. Okay, and it was right around there where I bought it. Okay, now when I bought the first put, which was up here, which was like back on March the 18th, or maybe it was actually, I think it was on March the 8th. So it would have been right around there. And so that's why, for the moment, the diagonal spread was working for me, because it kept going up, and it went all the way up to 59, and this is where the bottom dropped out, and it had the bad earnings, and this was the second time the bottom dropped out, when the whole market was going down, and Intel was getting beat up, and a lot of stocks were getting beat up because of all the fears of the trade wars and the tariffs and everything. And so right here, is when I was having a delta problem, and that's why I bought the extra put. And so if we go back to my account here, so I have currently 2 long puts. I have my original put, $52.50, which I spent $7.35. It's up to $1,085, and then I have a $45 long put, and that's the most recent one that I bought, and I spent $5.75. It's up to $622.50, and then here's my short put, which I sold to open. I think it was 186, and it's down, right? But I'm covered because I have an extra put, and that's what makes it a ratio spread. Now, option spreads are pretty simple, okay? When you're doing option spreads, if you want to, you could just buy a put. And when you buy a put, you're making a bet that the stock's going to go down, right? But the problem with just buying a put is that stock options lose value as time passes by. That's called time value, or theta if you want to use the Greek. So that's why instead of just buying puts, or if you think stock's going to go up, you do a call spread. You buy a call, you turn it into a spread. You buy the put, but then you sell a put, okay? And that pays for that time value. Now the problem with doing a spread is that, like in my case, if you're doing a very wide spread where you buy a long put and it expires in 2 years or whatever, and then you sell the open short puts that expire in a week or a month, if the stock moves a lot, like what you just saw, then you start to lose money on the delta, because the money that you make on your long put will be offset by the money that you're losing on your short put. So, and one thing I like about Schwab is it shows the gains and the losses. So here, my long put is up 346. My short put is down 293. Okay, so I like that it shows all that. Now, when you're doing a regular option spread, you're buying one put, you're selling one put, or you're buying 2 puts, you're selling 2 puts, or you're buying 3 puts, you're selling 3 puts. But when you're doing a ratio spread, now you're buying 2 puts and you're selling 1 put. That way, if the stock does go down, like what you see here, if it does do that, yeah, you know, you'll lose money on your diagonal spread, but you have an extra put option that is going up in value, okay? And so this put option, I'm up $36.90 or whatever, and overall I spent $5.75 for that. And if Intel keeps going down, if it goes down to $40 or $35, then this $45 put will offset the losses that I will take on the diagonal spread. And the losses that I take on the diagonal spread will be very minimal, because I will lose a little bit of money because the delta will be higher on the short put. And just for kicks, let's look at what the delta is on this 49 put and the delta on this 52.50 put to see how much money I would lose if it continues to drop. So this 49 put expires on the 19th of July. That's in 2 months from now. And let's take a look at the delta on that. So let's go ahead and go to the option chain like this, and let's put in Intel like that, and let's see what the chain says here. Let's see what the deltas are. Okay, slow computer, any day now. All right, so July the 19th was my $49 put. Here it is right there. And now we got to look for the Greeks. So that would be right there, like that. And there's a delta right there. And so if we go down into the 49, and I got to put in more strikes so it'll come up. The delta on the 49 is at 20. Okay, now let's look at the delta on my 52.50. So let's go to, oh, that's the call. I'm sorry, I'm looking at the wrong thing. The puts are on the right. So let's take a relook at that. So the delta is There you go. See how high that is? The 49 has an 83 delta, and I already know without looking that's going to be way higher than the delta on my long, but let's look and see how much higher. So I have a 52.50, and it's a 59 and 20. So let's say 60. So the delta is 89, so I'm losing about $30 per contract. Every dollar it goes down, I take a $30 loss because my long put has a 60 delta, or has a 60 delta, yeah, right there, and my short put has an 83 delta. So that's actually like $23. So every dollar it goes down, I lose $23. But I have a 45 delta. I have a $45 call, and that delta is a nice healthy $42. So that offsets the $23 loss. So now every dollar it goes down, I'm not losing $23. I'm making $19. So go ahead and you know, lose money for me on the first one, right? No problem, because I have this 45 delta. And so my trading plan is very simple. Now that I got that $45 put that I bought, now I can rest easy. And my plan is very simple. If Intel continues to drop and stay below this short put, I will just continue to sell the open puts all the way until expiration, and whatever profit I make is whatever my profit is. If Intel goes back up above 49, then I can start selling to open a second put on that, and I make nice money on the theta. The money that I will make on the theta will more than pay for the $575 that I spent on the 52.50. And really the only way I could really get hurt is if Intel went back up to $60 a share. So this ratio put spread has answered my problem. It has solved my problem, and now I'm back to my money making ways again. And if you look at my account value, I didn't put a lot of money in Schwab. I have $33,358. And if we go to my transactions, you can see that I initially put the money back in February the 4th, and I didn't even do anything until March the 8th. But I put $3,268.53. So I'm up about $80 overall. And so that's about, let's see, $80 on a $3,200. That's about a 2.5% return in 3 months. So I'm on track to make about a 10% return. So sure would be nice if I could always have this good of luck. But for now, this spread is working well for me, and I'm going to stick with it. So if you are trading spreads, consider buying an extra put or an extra call if the stock goes in the money against you. Like if you have a call spread, and let's say you bought a 40 call and you're selling the open 41s or 42s, and then the stock goes up to 45, buy another call. That's all you're doing. That way you can continue to hold that short call and that long call, and you got that extra call that will offset any losses that you take on your first spread. So that's it for this video. Thank you for watching. As always, if you have any questions, comments, or feedback, feel free to leave a comment, and always appreciate any support, likes, whatever you want to give me. And until the next video, I wish you all happy trading, and have a good day. And I will see you in the next video.